You buy stock and the stock is at this price, and then 2 years later, the stock is triple the price and you want to sell it. Are you telling me that you have a way to defer the tax situation there? Let's talk about structures and ideas, and maybe you can shed some light on it for me too.
Yeah, and that's actually why we started our company, Capital Gains Tax Solutions, right? Because in the 2008 crash, a lot of my clients, when I was at Marcus and Millichap selling highly appreciated, multifamily properties in Northern California, they had felt trapped and pressured and had overpaid via the 1031 exchange. That's the only thing they knew, right? And they thought that was the only tool they could use to defer tax. And then everything stopped, and that was in the 05-06 market, and then 08 hit, and then some of them lost everything. Some of them lost half. And then we found out about a thing called a Deferred Sales Trust, which goes back 25 years now, thousands of closes. It's been through the IRS, but it's proprietary and it's protected. And so we launched our company on basically that premise, that there is a better way. It's an alternative way, and it can actually work for not only real estate, but it works for primary homes, it works for business sales, works for stock, and it's had an amazing track record. But even the smartest folks either have heard about it or don't quite know about it because they think they know, but they don't. So talk to us a little bit about the idea of bringing in new innovative ideas, and what's the process in which you do due diligence on that? Because the biggest thing we get, Kevin, is, well, that must be too good to be true. My guys would have already known about it, right? I have the best of the best, right? And then they go, wait, well, they don't. And then they end up joining us once they figure out how we do it, what we do it, and we sign the NDAs and everything. So, but walk us through just your due diligence and how you vet different, and it could be tax strategies, it could be a financial model. What is it about making sure that you go with the winners and say no to the ones that are maybe risky or too dangerous?
So we have 2 full-time lawyers, but we use probably 5 or 6 other outside law firms for different advice and things, because there's specialized knowledge that we need in the different industries we're in. So we need FDA counsel, SEC counsel. We can't afford to keep them full-time inside the company, but we have really deal-making lawyers that are part of the internal team. And so they have a little bit of knowledge in some of the tax arenas, but at the end of the day, we also have, I don't know how many different accounting firms we use, because, again, I don't control all the companies that I'm involved with. So I deal with, dozens of different accounting firms, because I have my own personal accountants, yes, but a public company it has to be a different accountant, because I've had accountants have to resign my personal account because they were taking on a corporate account and things like that. But I like to run. I mean, I don't do anything without having my CPAs and my accounting firm take a look at the structures. But I mean, let me ask you this. I mean, I've played with real estate over the years, but I'm not, I haven't done billions of dollars in real estate, but I have done billions of dollars in product sales. So I am a product marketing guy, but I also, let's talk about public companies and stock. So, because you started off saying that the capital gains worked for real estate. How do you do that when you buy stock and the stock is at this price, and then 2 years later, the stock is triple the price and you want to sell it? Are you telling me that you have a way to defer the tax situation there? Is that what you're telling me?
Yes, absolutely. Yes. And so the first one I was referring to is a 1031 exchange, which only applies to investment real estate. The second one I'm referring to is called a Deferred Sales Trust. It works for primary homes. It works for investment real estate. It works for highly appreciated public stock. It works for private stock. It works for collectibles, artwork. It works for Bitcoin, cryptocurrency. And it's literally, I think, the best kept secret. And not only that, it's new to people, but it has a track record of thousands of closes now, right? Over 25 years, 15 times no change IRS audits. The biggest deal was a $125 million deal. And one of the recent stock sales, I think, was for Netflix, and it was an over $5 million sale, and they were able to defer the tax. And it's really simple, actually, Kevin. It's actually just a seller carryback. What you do is you sell the stock to the trust before you ultimately sell it to the ultimate buyer. And what you do is Kevin, is you carry a paper, you carry, you become the lender. And so you say, hey, look, I'm going to finance the trust 100% of what the stock was due. Let's say it's a $5 million sale. And you get the $5 million buyer to buy it. And that's kind of the simplified version of this. But because we do this, we do it in a certain way, you haven't received what's called constructive or actual receipt. And so then you're in a tax deferral state. So yes, it absolutely works for public stock, private stock. It is a proprietary structure, but this is like, we believe it's the best kept secret out, and it really will change a lot of people's lives because we're looking at the largest wealth transfer in the history of the planet going on right now, and it's with the baby boomers, and it's 17 to 20 trillion dollars that's going to pass with every single day, 10,000 baby boomers turning 65, and there's 77 million in the U.S. alone, and they're looking for ways out of the toilet trash liability, out of the highly appreciated stock they've had. Could you imagine someone buying Apple 25 years ago, and basically they're kind of nervous to sell because they're going, I don't want to pay all this tax. I don't want to give all this wealth away to a government that'll probably waste it away pretty quick. But now we can put it into the trust. Now, once it's there and it's deferred, you can actually use the funds to invest into brand new real estate deals or brand new business deals. We call it the go fund yourself. Instead of having to get venture capital, it's kind of like a self-directed IRA. So there's a number of things that go through it. But yeah, the answer is absolutely it works. And we'd love to show you and your tax team how it works.
Well, listen, if you have something that can defer taxes in the sale of stock, like you just mentioned, I want to introduce you to my top people. Maybe you can become what I call a dream team member of what we do, because we're buying and selling stocks, quite a bit on a weekly basis.